12 Golden Rules of Trading. Introduction. Have you ever felt like the market is always one step ahead of you? Like you enter too late, exit too early, or somehow, no matter what you do, the market finds a way to humble you? Yeah, you're not alone. Every trader has been there. Whether you're a beginner trying to understand candlesticks or a few years in still trying to turn consistent profits, trading is hard. Not because the charts are impossible to read, but because no one teaches you the real rules. The emotional rules, the mental rules, the discipline rules, the stuff that actually makes or breaks a trader. Most people think trading is all about strategy, entry signals, indicators, secret patterns. But in reality, trading is 80% mindset and discipline, 20% technicals. This book isn't here to give you one more strategy to clutter your chart. It's here to give you something better, a foundation. These are the 12 golden rules that separate losing traders from long-term winners. These rules won't just help you survive in the markets, they'll help you grow, adapt, and thrive. They're simple, they're powerful, and most importantly, they're based on real experience, not theory. You'll learn how to think like a professional, control your emotions, protect your capital, and actually enjoy the process without losing your mind or your account. Because at the end of the day, trading isn't about chasing one big win. It's about becoming the kind of person who wins consistently. Let's be honest, you don't need more noise, you need clarity. You need truth, and you need a rule book that actually works. That's what this book is. No fluff, no hype, just 12 rules that could change the way you trade and think forever. So if you're ready to stop guessing, stop over-trading, and start building real momentum, let's dive in.
Chapter 1. Know your why. If you don't know why you're trading, you'll never last when it gets tough. Let's start with a brutally honest truth. Most people get into trading for the wrong reasons. Some want to quit their job next month and live on a beach in Bali. Others want to make money while they sweep, which sounds great until they wake up and see their entire account in red. And let's not forget the TikTok traders who made $500 in 5 minutes and suddenly believe they're the next Warren Buffett, minus the 90 years of wisdom. The truth? Trading isn't a lottery ticket. It's a business. And like any business, if you don't know why you're doing it, you'll either burn out or blow up. So why are you trading? If your honest answer is to make money, that's a good start, but it's not enough. Everyone wants to make money. The question is, what does that money mean to you? Is it freedom? Security? Revenge on your boss? Don't worry, your secret is safe here. You need a why that's deeper than dollars. Because the moment the market turns against you, and trust me, it will, your surface-level motivations will crumble. But your deep purpose, your real reason, that's what keeps you going. Think of your why as your anchor. The market is the ocean. Sometimes it's calm. Sometimes it's a full-blown hurricane. Your why keeps your boat steady when things get wild. Let's go back in time for a second. Imagine you're back in school. Remember that one class you absolutely hated? Maybe it was math or chemistry or that weird economics teacher who always smelled like burnt coffee. Now imagine if someone told you, you have to learn this stuff, but I'm not going to tell you why. Just trust me, it's important. How motivated would you be? Exactly. Zero motivation. That's how most traders operate. They're in the game risking real money, but they have no clue why they're doing it beyond getting rich. And when things go sideways, because in trading, they always do at some point, they quit. Or worse, they double down emotionally, try to get it all back, and dig themselves into a hole they can't climb out of. Now let's flip it. Imagine someone told you, if you master this, you'll have the freedom to work from anywhere. You'll never worry about your bills again. You'll be able to send your kids to any school you want. You'll sleep better at night because you know you're in control of your future. Suddenly, the grind has purpose. The late nights, the losing trades, the mistakes, they become part of the journey, not a reason to quit, but a reason to keep going. That's the power of knowing your why. Trading is not just a skill, it's an emotional sport. And if your why is weak, your emotions will destroy you. The moment you hit a few red trades, fear kicks in, or worse, greed. Then comes revenge trading, over-leveraging, panic, frustration. And before you know it, you're staring at your account like it betrayed you. But here's the thing, your account didn't betray you, your mindset did. Without a solid internal reason to stay the course, every small loss feels like failure. Every drawdown feels like doom. You start questioning your strategy, your setup, your life decisions, and eventually, let's be real, you question your existence. I knew I should have become a dentist. Don't worry. Every trader has been there, even the best. But the ones who survive and thrive are the ones who started with a clear mission. Let me tell you about a trader I coached named Mike. Mid-30s, corporate job, hated it, got into trading because he saw a YouTube video titled, "How I Made $10,000 in 3 Hours." You know, the ones. He signed up for every free webinar, downloaded every indicator known to man, and surprise, blew his first account in 6 weeks. He was ready to quit. But instead of jumping to the next shiny system, I asked him a simple question. Why are you really doing this? He paused, then said, because I want to spend more time with my daughter. I don't want to be the dad who's always too busy or stuck in traffic while she's growing up. Boom, that was it. That was his why. From that point on, his mindset shifted. He started treating trading like a business. He studied smarter. He accepted losses like a CEO handles expenses, not emotionally, but strategically. He grew slowly, but consistently. And 2 years later, he went part-time at work. Now he's full-time, still trading, still present for his daughter, still focused. That's what a real why can do. Let's get practical. If you want to find your why, here's the easiest way, is ask why 5 times. Sounds silly, but stay with me. You might start with, question, why do I want to trade? Answer, to make money. Question, why do I want to make money? Answer, so I can quit my job. Question, why do I want to quit my job? Answer, because it's draining me and I feel stuck. Question, why do I feel stuck? Answer, because I want more control over my time. Question, why do I want more control over my time? Answer, because I want to be present for my family and live life on my terms. Boom, there it is. That last line, that's your why. And it's a lot stronger than just making money, because let's face it, money comes and goes, but meaning sticks. When you tie your trading to something meaningful, it's no longer about wins or losses. It becomes a mission, a long game, something worth fighting for. But be warned, your why must be yours. Not your mentors, not your favorite YouTubers, not some guru who trades from a Lamborghini, rented by the way. Your why must come from your gut. It has to feel personal. If it doesn't make you emotional, it's not deep enough. And once you find it, write it down. Stick it on your wall. Read it every morning before you open your charts. Remind yourself why you're here, because that's how you build resilience.
Chapter 2. Risk what you can afford to lose. Trading isn't gambling unless you trade with money you fear losing. Let's start with a painful confession that every trader eventually makes, whether they admit it out loud or not. I risked too much, and I knew it the moment I clicked the button. Sound familiar? If it doesn't yet, give it time. Every trader at some point violates this golden rule, usually in the beginning when they think they're invincible and the market is their personal ATM. Spoiler, it's not. If you've ever felt your heart race after placing a trade, if you've ever refreshed your phone 19 times in 30 seconds, if you've ever prayed to the market gods to just go up a little bit more, congratulations. You risked money you couldn't emotionally afford to lose. Here's the deal. Risk is the price of admission to this game, but it should never be the reason you get kicked out of it. Most traders lose not because they didn't have a good strategy, but because they couldn't survive long enough for the strategy to work. Why? Poor risk management. It's like driving a Ferrari at 150 miles per hour without brakes. Sure, you'll feel powerful for a moment, but that tree's coming and it doesn't care how fast you are going. Let me paint you a real-world picture. Imagine you walk into a casino with $500 in your pocket. That's your entertainment budget. You're mentally prepared to lose it all if things go sideways. You sit down at the blackjack table, play smart, maybe win a little, maybe lose a little, but you're calm. Why? Because you accepted the risk up front. Now flip that. You walk into the same casino with $500, but that $500 is your rent money. You're not gambling with entertainment funds. You're gambling with your landlord's patience. Now every hand you play feels like a heart attack. Every loss stings like betrayal. Every win feels like a miracle. You're emotionally hijacked. It's not fun. It's not smart. It's survival mode. That's what trading with scared money feels like. It clouds your thinking. It destroys your logic. It magnifies every small mistake. And worst of all, it sets you up to make terrible decisions. Here's the truth most new traders don't want to hear. If losing this money will affect your ability to live, breathe, sleep, or pay your bills, you should not be trading it. Period. Trading should be done with disposable capital, money that, if lost, won't derail your life. Notice I didn't say money you don't care about. You should always care, but you shouldn't depend on it. That's the difference between calculated risk and reckless hope. Now, let's talk about what actually happens when people break this rule. They start playing mental gymnastics. They tell themselves, this setup looks perfect, this trade can't lose. They double down, they over-leverage, they ignore their stop-loss, and then boom, one bad candle later, they're in shock. And then comes the worst part. They try to get it all back. This is where the gambling begins. They increase position size, they abandon their rules, they chase every setup that even slightly resembles a comeback. They go from strategy to strategy, blaming the market, blaming indicators, blaming the news. They never blame the real culprit, their poor risk management. Look, trading is not about being right every time. It's about staying in the game long enough to let the edge play out. Even pro traders with 10+ years of experience lose trades every week. The difference? They manage their losses like professionals. They already accepted the possibility of the loss before they placed the trade. That's what you need to learn. Now let's zoom in deeper. What does risk what you can afford to lose actually mean in practical terms? It means you should never risk money you emotionally can't let go of. For most people, that's money for rent, food, school fees, emergency savings, or anything tied to their survival or peace of mind. In the trading world, this usually translates to risking 1 to 2% of your total account per trade. That's not just some random rule pulled out of thin air. That percentage exists for a reason. It gives you breathing room. It allows you to take multiple trades, experience natural losses, and still have capital left to trade tomorrow. If you risk 10% per trade, guess what happens after 5 losing trades? You're down 50%. Mathematically, that's a disaster. Emotionally, it's a crisis. Psychologically, it's game over. And the sad part is, most traders blow their first few accounts because they never took this rule seriously. But let's say you do. You treat your account like your business capital. Every trade is a calculated decision. Every risk is pre-planned. You don't hope, you execute. When you lose, you don't panic. You don't tilt. You don't blame the universe. You simply log the trade, learn from it, and move on. That's how professionals think. That's how professionals win. And here's a little secret. When you stop fearing the loss, the game gets a whole lot more fun. Because now you're not attached to the outcome. You're focused on the process. You start to realize that trading is just probabilities and patterns, not personal attacks on your self-worth. One of the best compliments you can give yourself as a trader is this: I'm okay with losing this trade because I know I'm playing the long game. And that's what this rule is all about. So the next time you're about to enter a trade, ask yourself, if this goes wrong and I lose this money, will I still be able to think clearly,
sleep peacefully, and trade again tomorrow? If the answer is yes, go ahead. If the answer is no, step away, rethink, resize. Because no trade is worth your peace of mind, no setup is worth blowing up your account, and no dream is worth turning into a nightmare because you didn't respect the risk.
Chapter 3. Plan the trade, trade the plan. Winging it is not a strategy. Let me say something that might sting a little. If you're trading without a plan, you're not trading, you're guessing with confidence. And honestly, guessing with confidence is how most people blow up their accounts. They click buy because a candle looks sexy, or the RSI is low, or some dude on Twitter just said, "This is about to explode." Spoiler alert, it usually doesn't. Now, imagine this. You walk into an airplane cockpit, and the pilot turns to you and says, "We're just going to wing it today. No flight plan, no destination. Let's see where the wind takes us." You'd turn around and run, right? So why do so many traders sit down every day, open a chart, and just go with their gut? No plan, no process, no checklist, just vibes and hope. Hope is not a strategy. Vibes don't pay the bills. Professional traders treat trading like a business, and every business needs a plan. The hard truth? Most traders lose not because they lack knowledge, but because they lack structure. They don't know exactly when to enter, they have no clue when to exit, they move their stop losses like they're playing a game of musical chairs, and they change strategies every 2 days depending on what YouTube says is working. Let me be blunt. If your trading plan lives only in your head, it doesn't exist. The market is chaotic. It will test your emotions, your memory, and your logic, all at the same time. And when emotions rise, memory fails. You'll forget your rules, abandon your system, and then blame the market when things go wrong. So here's your new mantra. Plan the trade, trade the plan. That means before you ever click that buy or sell button, you already know 4 things. Why you're entering, where you're exiting if you're right, where you're exiting if you're wrong, how much you're risking on this trade. If you don't know those 4 things, you have no business entering that trade. You're not a trader, you're a button clicker. I once met a guy who told me, "I just enter when the chart feels good." The chart feels good? What is it, a massage therapist? That's like building a house with no blueprint and just stacking bricks until it looks right. You might get lucky once or twice, but eventually it collapses. That's exactly how trading without a plan feels. It works until it doesn't. And when it doesn't, it hurts. Let me tell you why a plan is powerful. First, it gives you clarity. When you sit down with a written process, you stop chasing random setups. You know what to look for, and more importantly, you know what to ignore. That alone will save you from half your bad trades. Second, it gives you consistency. You stop flip-flopping between indicators, strategies, and chart patterns. You run your plan like a machine. You become boring. And in trading, boring is profitable. Third, it gives you peace of mind. You don't panic mid-trade. You don't second-guess every candle. You already know your exit. You already know your stop. You're not reacting, you're executing. That's the difference between amateurs and pros. Amateurs get in and then ask, "What now?" Pros already know what now before they ever get in. I get it. Making a trading plan doesn't sound sexy. It's not as fun as hunting moonshots or aping into some breakout. But here's the deal. The people who win in this game are the ones who are process-driven, not emotion-driven. Let me break it down with a story. I once worked with a trader named Sarah. She was smart, sharp, and technically skilled. But she kept blowing up every 3 months. She'd go on a good run, double her account, and then one day, boom, one trade would wipe it all out. I asked her to walk me through her plan. She said, "I kind of just feel the market. I use indicators, sometimes support and resistance, sometimes not, depends on the vibe. There it was again, the V word, vibe. I told her, that's not a plan, that's a mood. So we built her a real plan. Simple, clear, defined entry rules, fixed stop loss, predefined exit target, maximum 2% risk per trade. If the setup didn't meet all 5 rules, she didn't touch it. Guess what happened? She stopped overtrading. Her win rate didn't even improve much, but her consistency did. And within 6 months, she was finally profitable. Not flashy, not wild, just consistent, boring, repeatable profits. The truth is, a plan doesn't make trading easier, but it makes it doable. Now, let's address the elephant in the room. Why do so many traders ignore this advice? Because it's boring. Planning is the vegetables of trading. Everyone wants dessert, the profits, the wins, the screenshots. No one wants to eat their broccoli and build a spreadsheet. But if you want to survive and thrive in this game, you need to become a disciplined executor, not just a hopeful speculator. Think about it. You wouldn't start a business without a business plan. You wouldn't build a house without a blueprint. You wouldn't even go on a vacation without checking Google Maps. So why trade without a plan? And no, buy when it looks bullish is not a plan. That's a vibe in disguise. Your plan should tell you exactly what market conditions need to be present for you to act, what time frame you're trading, what your position size will be, where your stop goes, where your target is, when to walk away, when to re-enter. It should be so clear that someone else could follow it. Because when your plan is written down, and I mean written, not floating in your mind, you become accountable to it. You stop improvising. You stop making emotional decisions. You become a decision maker, not just a guess maker. And yes, your plan might not work every time. That's okay. Trading plans don't exist to guarantee profits. They exist to create consistency, which is the only road to profitability. Think of a trading plan like going to the gym. You don't lift heavy weights on day 1 and walk out with a six-pack. You show up consistently, follow a program, eat clean, rest right, and after months of discipline, the results show up. Same in trading. The plan is your workout. Your strategy is your program. Your discipline is your protein shake. So, how do you stick to the plan? Well, the hard part isn't milking the plan. It's trading the plan. It's resisting the urge to tweak your stop loss after entering. It's ignoring the temptation to jump into a trade that almost fits your criteria. It's not changing your entire system because of 2 red trades in a row. It's trusting your process even when it hurts. And let me be real, it will hurt. There will be days where the plan says stay out, but your ego says go in. Days where the setup checks all your boxes, but still loses. Days where you want to throw the whole strategy in the trash and start over. Don't. That's where 99% of traders lose the game, not because the plan was bad, but because they didn't give it time to work. A good plan is like a seed. You don't dig it up every day to see if it's growing. You water it, you nurture it, you let it take root. Then, over time, it grows. So here's your homework. Write your plan. For real. Open a blank doc. Title it, My Trading Plan. Start with your setup. What are your entry rules? What do you need to see before clicking buy or sell? Then define your risk. How much will you risk per trade? Where will your stop go? Where your target is? Is it a fixed RR? A trailing exit? Finally, define your mindset rules. How many trades a day? What do you do after a loss? What do you do after a win? Once you have it, follow it like your life depends on it. Because in trading, your account's life actually does. Trading without a plan is like skydiving without checking your parachute. It might work until it doesn't. And when it doesn't, it's a long way down.
Chapter 4.
Master one strategy first. You don't need 10 strategies. You need one that works. Let me start with a confession. When I first got into trading, I had this wild idea that the more strategies I had, the more powerful I'd become. Like I was assembling some kind of trading Avengers team. One for breakouts, one for reversals, one for the London session, one for New York, one that only worked on Wednesdays when the moon was in Scorpio. I had folders, I had PDFs, I had systems with names like Triple EMA Death Cross Alpha V2. Spoiler alert, none of them worked. Not because the strategies were bad, but because I never mastered any of them. I was always chasing the next big thing, the next indicator, the next holy grail setup. I became a full-time strategy collector and a part-time trader. And the worst part, I felt productive. But you know what really felt productive? Making consistent profits with one simple strategy that I actually understood. Let me tell you something that might save you years. You don't need more strategies. You need one that works. Traders often think that having 10 strategies makes them more prepared. In reality, it just makes them confused. When you sit down at your charts and have 5 different ways to enter a trade, your brain melts. You overthink. You hesitate. You jump into setups that don't match anything clearly. You second-guess yourself into oblivion. You don't need 10 tools. You need one sharp knife. If you look at top traders, I mean the real ones, not the ones flexing rented Lambos and demo account screenshots, you'll notice something interesting. They're boring. They do the same thing every day. Same routine, same entry criteria, same exit logic. Like machines, like surgeons. No fluff, no magic tricks, just consistent execution of a well-understood strategy. Because mastery isn't about knowing everything. It's about knowing one thing better than 99% of people. Think about athletes. A professional tennis player doesn't also train for boxing, swimming, and gymnastics. They master tennis over and over. Forehand, backhand, serve, repeat. Day in, day out. But somehow in trading, we feel like we need to be multi-skilled juggernauts from the start. Like we need to be experts in price action, indicators, news trading, Fibonacci, Wyckoff, order blocks, market structure, and maybe throw in a little astrology for good luck. That's not trading. That's overcompensating for insecurity. You don't need more strategies. You need to pick one and go deep. Let me tell you a story. There was a guy named Kyle I mentored a while back. He was new to trading but smart and hungry. He had tried 5 strategies in 5 weeks and was frustrated that none of them worked. So I asked him, "How long did you backtest each one?" He said, "I ran each one on TradingView for a couple of days." I laughed, gently, then said, "You don't need another strategy. You need to marry one. Study it. Understand it inside and out. Know how it behaves in good markets, bad markets, sideways markets. Know when it breathes, when it sleeps, when it fakes you out." So, I gave him one simple strategy. Nothing fancy, just a basic trend-following setup on the 4-hour chart with clear rules. He backtested it for 2 weeks. He traded it on demo for another 2, then he went live with tiny size. 3 months later, he was up 12%. Not earth-shattering, but consistent. And most importantly, confident. Because when you know your strategy inside and out, you stop hoping it'll work. You start trusting that it will. Now, let's be honest. Picking one strategy feels boring, especially in a world where everyone is screaming, "This new indicator is 98.6% accurate," or "Try this secret hedge fund method," or "Here's how I made 4K in 20 minutes scalping options on a scooter." It's seductive, but it's dangerous. Jumping from strategy to strategy is like planting 10 seeds and never watering them long enough to grow. You end up with 10 patches of dry dirt and no harvest. But if you pick one seed, water it, care for it, stick with it, you eventually get a tree. That tree gives you shade, fruit, and peace of mind. That's what mastering a strategy feels like. Now let's talk about the learning curve. When you start with a new strategy, everything feels awkward. The setups don't make sense, the chart looks noisy, your confidence is low. That's normal. But the more you look at it, the more you backtest it, the more you see how it behaves, the more it clicks. Suddenly, that pattern you used to miss jumps out at you. That fake out you used to fall for becomes obvious. That setup that confused you becomes second nature. And that's when the magic starts to happen. Because now you're not guessing, you're not hesitating, you're not overthinking, you're simply executing. You become what I call a strategy sniper. Calm, patient, precise. No panic, no scattershot entries, just waiting for your shot and pulling the trigger when it's time. Now let's not sugarcoat it. Mastery takes time. You're not going to be an expert in a week. You'll have losing trades, you'll doubt yourself, you'll feel like quitting. But that's exactly why most people never make it, because they quit before the breakthrough. They abandon the strategy before it even had a chance to show its real power. Here's a thought. If you spent the next 90 days studying just one strategy, journaling every trade, reviewing every loss, and refining your entries, where would you be? Answer: miles ahead of 95% of traders who are still hopping from YouTube video to YouTube video searching for the next shiny object. You want a shortcut? Here it is. Stop shortcutting. Focus. One strategy, mastered. Now, choosing the right strategy matters too. I'm not saying pick any random nonsense and marry it for life. Pick something that aligns with your personality. Are you patient? Look at swing trading. Are you more active? Maybe scalping or intraday. Do you like clean charts? Go price action. Prefer structure? Use indicators. But whatever you choose, own it. When someone asks, what's your edge? You should be able to explain it in 2 sentences, not 20 indicators and a shrug. I wait for a 20 EMA pullback on the 1-hour chart in an uptrend and enter on a bullish engulfing candle. Boom! Simple, clear, repeatable. That's what a real strategy sounds like. And when you master one strategy, something amazing happens. You stop being addicted to the market. You stop chasing trades. You wait. You observe. You strike only when your setup shows up. It's like being a lion in the wild. Lions don't run after every animal they see. They wait. They pick their moment. Then, precision. That's you. One strategy, one goal, one mission. So if you're still jumping from system to system, ask yourself, is it the strategy that's the problem or your lack of patience with it? Are you looking for a holy grail or are you just scared to go deep? Because depth is where the gold is. Surface level dabbling leads to surface level results, but deep mastery leads to freedom. Financial freedom, emotional freedom, the kind where you can look at a chart and say, I know exactly what I'm doing and I know exactly why I'm doing it. And that feeling, it beats every quick dopamine hit from trying something new. It's peace. It's confidence. It's growth.
Chapter 5. Control your emotions or be controlled. The market will test your psychology more than your knowledge. Let's start with this. If trading were only about charts, indicators, and setups, everyone would be rich. Seriously, think about it. There are more free YouTube tutorials, Discord servers, and $99 winning strategies out there than ever before. If information alone was enough, we'd all be sipping cold brew on a yacht, placing trades from our iPads. But we're not. Because trading isn't just a game of knowledge, it's a game of emotional control. And here's the twist. The better you get at reading the market, the more dangerous it becomes if you can't control yourself. Why? Because now you have the technical tools to trade. But if you don't have the psychological discipline to stick to your rules, those tools become weapons you use against yourself. Let's be honest. Most of us have been there. You followed your plan, you waited for your setup, you entered with perfect timing. And then, a candle twitched. Your heart dropped. You doubted. You exited early, only to watch the market go exactly where you expected it to. Now you're staring at your screen like the market personally disrespected you. It didn't. Your emotions did. The market doesn't care about your feelings. It doesn't know who you are. It's not out to get you. But your emotions? Oh, they know exactly how to mess with you. Fear, greed, FOMO, revenge, the full Avengers lineup. Let's break them down. First up, fear, the original account killer. Fear makes you exit too early. Fear makes you avoid taking a valid setup. Fear makes you reduce your position size after a loss even when the setup is golden. Fear makes you check your open trades every 20 seconds, like watching the chart will magically make the candles behave. But where does fear come from? It comes from not trusting your plan, from risking too much, from not having data, from letting a past mistake hijack your present moment. Now meet greed, fear's equally destructive cousin. Greed makes you move your take-profit target just a little higher. Greed makes you double down on a trade that's already moved. Greed whispers, "Let's go big this time," even though your risk rules say otherwise. And here's the worst part about greed. Sometimes it works. You take a massive position, you break your rules, the trade hits profit. And suddenly, your brain is addicted. You've just reinforced bad behavior with a good result. Now you're starting to chase that feeling again. And the market? It's waiting for you with a hammer. Then there's FOMO, the fear of missing out, the social media virus. You see someone on Twitter post their P&L, $3,247 profit in 15 minutes. Easy. Your setup hasn't triggered, but you think, screw it, I'm not missing this move. You enter late, no confirmation, no plan. It spikes and dumps. Now you're stuck in a trade that never fit your system in the first place, all because of a screenshot from someone you've never met using money they may not even have. Newsflash, FOMO is fantasy dressed as urgency. The market will still be here tomorrow. You don't need to chase every single move. You just need to wait for your move. And then we have the darkest of all, revenge trading. You take a loss, you're pissed. So you click again. No setup, no logic, just fire and fury. Now you're not trading the chart anymore, you're trading your frustration. Now you're not just trying to make money, you're trying to make your emotions feel better. Big mistake. Revenge trading is like drunk texting your ex. You regret it the moment you do it, but in the moment, it feels like a great idea. It's not. The market doesn't care that you just had a losing trade. It doesn't owe you a win. There is no comeback trade. There's only the next good trade. And you're not going to find it by trading angry. Now that we've dragged all these emotional monsters into the light, let's talk about the real work. How do you control them? You don't turn off emotions. You're human. You feel. That's natural. But you can learn to manage them, regulate them, respond instead of react. One of the most powerful tools? Journaling. Yeah, I know. Not sexy, not exciting, but life-changing. Every single trade you take, write it down. What setup did you use? Why did you enter? What were you feeling before, during, and after the trade? Did you follow your plan? If not, why not? Over time, you'll start to see patterns. You'll notice that every time you revenge trade, your brain says the same thing, just one more. You'll notice that your biggest losses come after your biggest wins. You'll see that you get emotional when you don't sleep, or when you skip meals, or when you trade under stress. Trading becomes more predictable when you become more predictable. Next up, breath work. Yeah, you heard me right. Breathe. Before you trade, especially if you're feeling off, take 5 slow, deep breaths. In through your nose, hold, out through your mouth. You think it's a gimmick? It's not. It lowers cortisol. It grounds your nervous system. It gives your thinking brain a fighting chance against your emotional brain. Because here's the truth. You don't need to be fearless. You need to be
calm. Calm traders don't panic. Calm traders don't chase. Calm traders don't blow up their accounts because they lost 2 in a row. Want to go deeper? Practice emotional labeling. When you feel anxious, don't shove it down. Name it. This is anxiety. This is frustration. This is greed. Labeling the emotion gives your brain space. It separates you from the feeling. Because once you name it, it loses its grip. Another pro tip? Take breaks. If you lose a trade and feel tilted, walk away. Go outside, drink water, pet your dog. Do anything except trade. You're not weak for needing a reset. You're smart. A break can save your account more than any indicator ever will. And finally, learn to forgive yourself. You will mess up. You will break your rules. You will click a dumb trade and say, "What the hell did I just do?" Don't spiral. Don't quit. Don't tell yourself you're a failure. Just say this: "That was an emotional mistake. I'm human. Now I'll fix the behavior." The best traders aren't perfect. They're self-aware. They know their triggers, they track their patterns, they course correct fast. That's why they stay in the game when others burn out. Because remember, this game isn't about one perfect day. It's about staying sane enough to trade tomorrow. Let me leave you with a short story. I knew a guy, let's call him Marcus. He was technically brilliant, knew market structure like the back of his hand, could spot fakeouts from a mile away. But every time he took a loss, he'd spiral. He'd revenge trade. He'd triple his position size and blow half his profits by lunchtime. I told him, your biggest problem isn't your entries, it's your ego. So we worked on his psychology, journaling, breathwork, pre-trade routines, affirmations, the whole 9 yards. 3 months later, he wasn't just a better trader. He was calmer, happier. His equity curve looked smoother. And the best part? He started enjoying the process again. Because when your emotions aren't controlling you, trading becomes fun again. You feel confident. You feel in control. And guess what? You start making better decisions. Not because the market changed, but because you did.
Chapter 6. Cut losses fast. Let winners run. Your ego hates this. Your account loves it. There's a reason this rule is repeated in every serious trading book, every seasoned mentor's mouth, and every successful trader's journal. It's simple, it's brutal, and it's hard to do. Cut your losses fast. Let your winners run. Sounds easy, right? Like a motivational poster. But try doing it with your real money on the line, and you'll see why most traders struggle with this one rule more than anything else. Here's what usually happens. You enter a trade. Everything looks perfect, a textbook setup. You're already imagining the profit, the celebration, maybe even a cheeky Instagram story with that green P&L. But then, the market moves against you. Not a big move, just a small dip. You're like, it'll bounce. It's just a fake out. It dips more. Now you're sweating. You zoom out. You draw new support lines. You switch time frames. You open YouTube and type, "Is Euro USD still bullish?" Welcome to the emotional black hole known as hope mode. You're not trading anymore. You're praying with open trades. And instead of cutting the loss when it was small, you're now holding on, telling yourself, "I'll exit once it gets back to break even." Spoiler, it doesn't. The loss grows. Your stop loss becomes a decoration. Your account bleeds, and all because you couldn't do one thing: let go. Let me be blunt. Your ego is the reason your losses get big. Your ego says, "I can't be wrong." Your ego says, "It'll come back." Your ego says, "I just need to wait a little longer." But the market doesn't care about your feelings. It doesn't care how long you waited for that setup, how much time you spent on TradingView drawing arrows and boxes. It moves how it moves. And if you're wrong, even just temporarily wrong, the best thing you can do is get out. Cutting a small loss is like taking a mosquito bite. Holding a loss and hoping it reverses is like ignoring a tumor. And now let's talk about the second part. Let your winners run. You'd think this part is easy. I mean, who doesn't like making money? But here's the twist. Most traders exit their winning trades too early. Why? Because we're addicted to the feeling of being right. The moment we're in profit, we hear this little voice in our head. Take it. Don't risk it. Secure that $12 profit. Green is green, right? Sure, green is green. But $12 profits on a $100 risk, that's not trading. That's survival mode. And survival mode doesn't lead to freedom. It leads to burnout. You see, trading is a numbers game. The only way to be consistently profitable, especially with a 40 to 50% win rate strategy, is to let your winners be much bigger than your losers. That means accept market tells you to get off the train. I once mentored a guy who cut all his trades at 1R risk. Every time he hit 1R, he was out. Safe. Secure. But his losses, he didn't cut them quickly. He let them linger. So he was making $100, losing $200. Do the math. He could have had a 60% win rate and still lost money. That's what happens when you cut winners short and let losers grow. It's backwards. It's upside down. It's emotional trading in disguise. I get it. Letting winners run is scary. You're watching unrealized profit float in front of your face. Your brain is screaming, "Take it before it disappears." But here's the thing. Letting a winning trade run isn't about being greedy. It's about being strategic. It's about understanding that one good trade can pay for 5 bad ones. It's about giving the market enough room to breathe. Because markets don't move in straight lines. They wiggle, shake, test your nerves. A strong trend will pull back, scare you, then continue higher. If you panic and exit at every dip, you'll never see the big move. You need patience and confidence and a plan. Yes, a plan, that thing we keep talking about. If your take profit is based on a 3R target, stick to it. If you're using a trailing stop, follow it. Don't override your rules just because a few green candles made you giddy. That's how you turn $200 into $40, then regret it for days. Now, let me be real with you. There's nothing more painful than watching a winning trade reverse and hit break even because you didn't take profit. But you know what's worse? Never letting your trades reach full potential because you're always cutting them short. Trading is a business of probabilities, not perfection. You're not going to catch every top or bottom. You'll have trades where you gave back some profit. That's part of the game. But if your average winner is 3 times the size of your average loser, you can be wrong more than you're right and still win over time. Let's zoom out for a second. This rule, cut losses fast, let winners run, is really about emotional maturity. Can you accept being wrong quickly without punishing yourself? Can you accept uncertainty while sitting on an open winning trade? That's the test. When I meet a new trader, I don't ask what indicators they use. I ask how they manage losing trades. Because that tells me everything. If someone can't take a small loss without spiraling, they're not ready. If someone can't sit through a trend without exiting early, they're not ready. Because this game isn't won by geniuses. It's won by emotionally stable operators. Let me share a story. There was this trader, Diego. Sharp guy, ex-engineer, loved data, loved logic, but emotionally, total wreck. He'd hold losers until they drained 30% of his account, but he'd take profit the moment he saw a few pips in green. Fear dominated every decision. We changed 2 things. First, he started cutting losses at 1R risk max, no exceptions. Second, he wasn't allowed to take profit unless the trade reached at least 2R or his trailing stop was hit. At first, it was hard. He'd exit too soon. He'd flinch. But after a month of following the rule religiously, his P&L flipped. Why? Because even though he had a 42% win rate, his average winner was 3 times the size of his average loser. It wasn't magic. It wasn't mindset hacks. It was discipline. Diego stopped trying to be perfect. He started trying to be profitable. Big difference. So let's say you're reading this and nodding, thinking, yep, that's me. I do that. I hold losses and kill winners. What now? The fix is simple, but not easy. You need to build a system that forces you to cut losses and gives your winners breathing room. Use stop losses, fixed or dynamic, doesn't matter, just use them. Set take profit levels based on real strategy, not emotion. Use trailing stops if you're nervous. Lock in gains without cutting short a big move. Journal everything. Track your winners. Study your losers. See the patterns. And most importantly, remove your ego. Because this rule, it's ego's worst nightmare. Your ego doesn't want to admit it was wrong, so it holds losses. Your ego wants to be right, so it snatches quick profits. But your account wants the opposite. Your account wants you to lose small, win big. That's how the math works. So next time you're tempted to give it a little more room on a loser, remember, you're not just losing money. You're training yourself to ignore your own rules. And when you're about to snatch a tiny win because you're scared to hold, ask yourself, what would a professional do? Probably the opposite, because the pros aren't attached to being right. They're committed to making money. They treat trades like buses. Miss one, another's coming. Lose one, no big deal, because they know the game is long and discipline is the shortcut.
Chapter 7. Stay out when it's unclear. Sometimes the best trade is no trade. Let's start this chapter with a bold truth that might sting a little. You don't get paid to click buttons. You get paid to make good decisions. And sometimes the best decision you can make as a trader is to do absolutely nothing. No, really. Zero. Nada. Zilch. I know that sounds weird in a world where hustle is glorified and doing something always feels better than waiting. But in trading, that mindset will murder your account. You're not a machine. You're not paid by the hour. You're not rewarded for activity. You're rewarded for clarity, for patience, for timing. And guess what? Sometimes the market gives you none of those things. Sometimes the chart is choppy. Prices ranging like a drunk penguin. Volatility is dead. Every candle contradicts the last one. Indicators are confused. Your setup doesn't line up. Your gut says, this looks off. And still, you feel the itch. The itch to click. The itch to just try something. After all, you're here. The market is open. You've got time. Why not? I'll tell you why not. Because unclear trades equals unclear outcomes equals emotional damage. You know those days where you force a setup, it doesn't work, and now you feel annoyed, so you enter another trade to make it back, and that one doesn't work either? Welcome to the spiral. Now you're not just losing money, you're losing composure. It all started with one thing. You traded when you knew better. Let me be real with you. The hardest skill in trading is not analysis. It's not finding support and resistance. It's not identifying breakouts or understanding order flow. The hardest skill is knowing when not to trade. Sitting on your hands, watching the market with no intention of acting, saying no thanks to an average setup that almost fits your rules, closing your laptop when your brain feels foggy, choosing patience when your account is screaming for action. That's not weakness. That's maturity. Let's take a metaphor. Imagine trading like fishing. You don't go to the lake and cast your hook every 10 seconds hoping to catch something. You sit, you wait, you study the water, you listen to the wind, you look for movement, and when the time is right, you cast once, and you do it with confidence. Now imagine a guy next to you furiously throwing bait in the water every few seconds, catching nothing but stress and confusion. Who's the better fisherman? Exactly, the patient one. So why do we struggle with this in trading? Because doing nothing feels wrong. It feels lazy. It feels like you're missing out. But let me flip the script for you. Discipline is doing nothing when nothing should be done. It's easy to trade when the setup is obvious, but can you stay out when the chart looks like abstract art? Can you avoid clicking when everyone else is panicking? Can you wait through Monday chop or post-news volatility and keep your cool? That's the game. Now, here's the secret sauce. You don't need to trade every day to make money. In fact, most full-time traders I know take 1 to 3 solid trades per week. That's it. They don't chase, they don't force, they hunt. They stalk their setup like a sniper, and when the market doesn't offer it, they stay flat. No trade, no FOMO, no shame. Because they understand that cash is a position. Let me say that again for the back row. Cash is a position. Being flat is a decision. Being flat is control. Being flat protects your capital, your confidence, your mental clarity. Think of your trading capital like a soldier. You don't send your soldier into battle without a good reason. You wait for high ground. You wait for the right moment. You wait until the risk is worth it. When the market is unclear, it's a battlefield with fog. You can't see, you can't plan, you're guessing. And guessing is not a strategy. Now, here's where this gets real. The biggest losses in your trading journal probably didn't come from your best setups gone wrong. They came from forced trades, emotional trades. It kind of looks like a setup trades. I haven't traded all day, so I'll just take this trades. Sound familiar? One of the best lessons I ever learned was from a trader named Alex who hadn't taken a trade for 9 days straight. 9 days. I asked him, "How do you not lose your mind waiting?" He smiled and said, "The market doesn't pay me for screen time. It pays me for clarity. No clarity, no trade." I've never forgotten that. Let's be honest, the market is not always tradable. Sometimes it ranges for hours. Sometimes there's major news. Sometimes volatility is dead. Sometimes your brain is tired. Sometimes your strategy just doesn't line up. And that's okay. You're not missing anything by sitting out. You're actually preserving your edge. You know what kills traders faster than losing? Overtrading. That's when you turn the market into a casino. Every candle is a reason to enter. Every twitch is a setup. Every bounce is a signal. And suddenly, you're clicking like a caffeinated squirrel on a sugar high. You win some, you lose more. Your edge is gone. Your mind is fried. And your account is whispering, "Please stop." All because you couldn't stay out when it was unclear. So, how do we fix this? First, you need a clear definition of unclear. For some, that's a choppy market. For others, it's a day with major news or low volume. For some, it's a day where the strategy setup just hasn't appeared yet. Whatever it is, define it. Know what a no-trade day looks like before you sit down. Then, set boundaries. You don't need to sit at the charts all day if nothing is happening. Check at your scheduled times. If your conditions aren't met, walk away. Go read, go for a walk, Go stretch. Go live. You're not a slave to the market. You're a strategist, and real strategy includes knowing when to wait. One of the most underrated skills in trading is selectivity. It's not about trading more, it's about trading better. Think about this. Would you rather take 20 trades with 10 winners and 10 losers, or take 5 trades with 4 winners and 1 small loss? Which one sounds easier on your brain? Which one gives you confidence? Which one builds momentum? Exactly. You don't need volume, you need clarity. Let me give you a fun story. There was a guy named Ethan. Good trader, great strategy, but he was addicted to being in the market. If he wasn't in a trade, he felt like he was falling behind. So he took setups that didn't fully align. He chased breakouts. He traded during news. He was always in something. And guess what? His win rate was 38%. He was constantly battling back from red days, burnt out, frustrated, doubting his system. Then one day, he gave himself a challenge. Only take trades that score 9 or 10 out of 10 on confidence. That week, he only took 2 trades. He won both. He was calm, focused, clear. And for the first time in months, he ended the week in profit without chaos. That's the power of staying out when it's unclear. It's not laziness, it's leverage. It's knowing that your real job is not to trade, it's to wait for a high-probability setup and then execute with precision. Now let's address the FOMO elephant in the room. Yes, sometimes the market will move without you. Yes, sometimes you'll miss a great setup because you were unsure. Yes, it will sting. But you know what stings more? Trading something that didn't meet your rules, losing big, and realizing you could have just stayed out and kept your capital. Missed trades don't hurt your account. Bad trades do. There will always be another setup, another opportunity, another trend. The market isn't going anywhere. But your confidence, that's fragile. That needs protection. And nothing protects your mindset better than waiting with intention.
Chapter 8. Protect your mindset like your money. You guard your capital, now guard your thoughts, or both will vanish. There's something we rarely talk about in trading. It's not a new indicator, not a secret setup, not some hidden strategy. It's your mind. That voice in your head, that quiet narrator during every trade, that roller coaster of emotions between entry and exit, that same brain you rely on to make split-second decisions in a market that doesn't care whether you slept well or ate breakfast. Your mindset is your true trading account. You could have the best strategy in the world. You could be trading on a 5-monitor setup in a tech-glowing, Red Bull-sponsored home office with Fibonacci lines that would make Da Vinci weep. But if your mindset is cracked, you're done. Because here's a hard truth most traders learn too late. A broken mindset will sabotage a perfect system. And yet we treat it like an afterthought. We obsess over entries, backtest strategies, download every PDF that says secret algo, but we don't stop to ask, how's my mental energy today? Let me ask you this. Have you ever taken a trade just because you were bored? Have you ever overtraded just to get back at the market? Have you ever broken a rule and said, I'll just journal about it later? Have you ever stared at charts so long you started seeing candlesticks in your dreams? Welcome to the club. You're not alone. Most traders burn out not because they're bad at analysis, but because they don't protect their mindset. So let's dig deep. Let's clean this up. Let's treat your mind like it matters. Because it does. The invisible fuel, mental energy. Every day you wake up, your brain has a limited amount of decision-making fuel. It's called cognitive bandwidth. And once it's used up, your brain goes into survival mode. That's when bad trades happen. That's when you revenge trade. That's when you skip journaling,
double your position size, and make choices you wouldn't even tell your accountability partner about. The market doesn't just require skill, it requires mental endurance. And if your brain is fried before the London session even opens, how do you expect to perform like a pro? This is why sleep matters. This is why your morning routine matters. This is why trading right after a fight with your girlfriend or while watching Netflix in the background is a disaster waiting to happen. You're not trading in a vacuum. You're trading with your full emotional state. Affirmations aren't woo-woo. They're weaponry. You might be thinking, I'm not the type to stand in the mirror and whisper affirmations to myself. That's fine. But let me reframe this for you. You already have affirmations. They just sound like this. I always mess this up. I knew I shouldn't have entered, but I did anyway. I'm never going to get this right. This strategy doesn't work. Maybe I should try something else. Sound familiar? You already affirm things to yourself. You're just affirming failure. What if instead you built new internal programming? I only take high probability setups. I am patient. I don't chase. My edge plays out over time. I am calm before, during, and after my trades. I don't trade to feel better. I trade my plan. You don't have to chant these with candles lit and incense burning unless that's your thing. You just need to consciously program your thoughts, because your brain becomes whatever it hears most often. Might as well feed it something useful. Your body is your broker. Look, if your diet consists of 3 Red Bulls and leftover pizza, your brain is not going to be firing at peak performance. Let's stop pretending like we can operate at peak performance while treating our body like a trash can. You wouldn't put cheap gas in a Ferrari. Why put junk into a brain that's supposed to make $500 decisions every day? Hydrate, sleep, move your body, touch some grass. This isn't motivational fluff. This is strategy. Your physiology drives your psychology. When your blood sugar crashes mid-trade, you'll make desperate choices. When you haven't moved all day, your brain starts swimming in stagnant energy. When your sleep is garbage, your reaction time is slower. And in trading, milliseconds matter. You want peak performance in the market? It starts with peak behavior out of it. Burnout is real, and it's sneaky. It doesn't show up with fireworks. It's a slow leak. At first, you just feel a little tired. Then you stop journaling. Then you stop reviewing your trades. Then you start skipping your risk rules. Then you start trading more, but winning less. Eventually, trading feels like a chore. Your edge is gone. Your energy is gone. And worst of all, your love of the game is gone. Burnout doesn't mean you're weak. It means you didn't rest before you needed to. Professionals rest before they're exhausted. They unplug. They walk away. They take weekends off. They take breaks after big wins and after emotional losses. Because rest is recovery, and recovery is what keeps you in the game long term. You are not a trading robot. You're a human being. Honor your humanity. Digital detox. Stop feeding your anxiety. Let's talk about that dopamine machine in your pocket, your phone. If you're checking Twitter, Discord, Instagram, and 5 Telegram channels between trades, your brain is cooking in low-grade anxiety. Here's the deal. Every time you check social media, you're exposing your brain to other people's opinions, results, and energy. And you will start comparing. They made $3,000 today. You missed your entry. Now you feel like trash. You doubt your plan. You question your strategy. You copy their trade ideas even though they don't fit your system. This is how good traders get poisoned by digital noise. Limit your inputs. You need space to think, not noise to react to. Turn off notifications, trade your plan, review your trades, then log off. Trading isn't just about what you do on the charts. It's also about what you allow into your mind before, during, and after you trade. Build rituals, not just routines. A routine is something you do. A ritual is something you respect. If you really want to protect your mindset, build a pre-trade ritual. Before every session, sit down, take a breath, check your setup checklist, set your intention, remind yourself, I'm not here to chase, I'm here to execute. Give your trading space meaning. Make it sacred. Respect it. Then have a post-trade ritual too. Win or lose, journal. Step away, reflect. Celebrate discipline, not outcome. This helps you emotionally detach from the result and reconnect with your process. Because at the end of the day, that's what trading really is. A process. And the more you respect the process, the more the process will reward you. Chapter 9. Never chase the market. If you missed the train, wait for the next one. Let me ask you something. Have you ever run after a bus, panting like a marathon runner, only to watch it pull away right before you reach the door? Yeah, me too. And guess what? Chasing the market is exactly the same thing, except with your money on the line. Chasing the market is a universal trader mistake, a rite of passage, and honestly, one of the biggest account killers out there. We all do it at some point, like that awkward first dance move you regret but can't unsee. Why do we chase? Because the market is exciting. The price shoots up. Everyone's making money. Your phone pings with alerts. FOMO slaps you in the face harder than your morning coffee ever could. You see green candles. You see other traders celebrating. You feel that nagging voice in your head saying, if only I'd gotten in earlier. So you jump in, hoping to catch that juicy move. Spoiler alert, catching a rocket mid-flight is harder than it looks. Chasing often means entering late, at the top of a move, and the market inevitably pulls back to remind you it's not a taxi. It doesn't stop for latecomers. In trading, patience is the difference between buying low and buying high. And chasing, that's a fast ticket to buying high and losing money. Let me share a little secret. The market owes you nothing. It won't pause, rewind, or give you a second chance just because you showed up late. But here's the good news. It moves in cycles, waves, and patterns. There will always be another opportunity, another train to catch. You just have to learn to wait for it. Why chasing feels so good and so wrong. Chasing the market feels like trying to sprint for the ice cream truck on a hot summer day. The longer you wait, the more it speeds up. The closer you get, the more it teases you. It's thrilling. It's urgent. It feels like a golden opportunity slipping through your fingers. Your brain loves this drama. It releases dopamine, the feel-good chemical, every time you hit buy or sell. That rush can become addictive. But here's the catch. Dopamine doesn't care if you win or lose. It only cares about the thrill of action. So even if you chase and lose, your brain might trick you into trying again because the rush feels good, even if the result sucks. This is how traders get trapped in a cycle of impulse trading. The cost of chasing. The reality is that chasing the market often means paying a premium price. You might buy right at the peak, only to watch the price retrace and your profits evaporate. Or worse, your stop gets hit quickly and you take a loss before the real move even starts. It's like arriving late to a party, finding the best snacks already eaten, and having to settle for stale chips. And all because you couldn't wait. If you're chasing, you're also more likely to ignore your own trading plan. You might skip your entry criteria. You might increase your risk. You might ignore your stop loss. The result? Emotional trading. Big losses. Regret. how to stop chasing and start waiting. The antidote to chasing is patience. Sounds simple, but it's hard. Because you have to trust that the market will give you another chance. You have to trust your plan, your analysis, and the process. And most importantly, you have to respect the market's timing, not yours. One great way to practice this is to set clear entry rules. Maybe it's waiting for a pullback. Maybe it's waiting for confirmation on volume or a specific indicator. Whatever it is, stick to it. If the market runs past your entry, let it go. Remind yourself, if this was a good setup, it will come back, or another will come along. The art of watching from the sidelines. Watching the market without trading can be painful. You see the price you wanted zoom past. You feel like you're missing out. But this is where the pros earn their stripes. They know the value of sitting on their hands. They know that the best traders are not the busiest traders, they're the smartest. When you watch and don't chase, you gain information. You learn the market's rhythm. You build confidence. You reduce mistakes. Sitting out when the market moves fast and messy is often the smartest move. A story you'll relate to. I remember a trader named Lisa who was notorious for chasing. She'd see a strong move and jump in late, hoping to catch a quick profit. She'd win sometimes, but more often lose or break even. Her account was stuck in a frustrating plateau. Then one day, her mentor gave her a simple challenge. If you miss your entry, don't chase. Wait for the next setup. The first few days were brutal. She wanted to jump every time the market moved. But slowly, she noticed something. Her losses shrank. Her profits grew. Her confidence skyrocketed. Lisa learned that waiting was not weakness, it was wisdom. Humor break, the bus and the trader. Picture this. You're running after the bus, dressed in your best suit, briefcase swinging, heart pounding. The bus driver looks at you through the window and shakes his head with a smirk. You finally get to the bus stop, just as the next bus arrives, nice and slow. Moral of the story? Chasing the first bus is exhausting and pointless. Waiting for the right bus, calm and ready, that's smart trading. Practical tips to avoid chasing. First, use alerts and limit orders. If you miss your price, don't jump in manually, let the limit order catch you on a retracement. Second, keep a journal of your chase trades. Write down how you felt, why you chased, and the outcome. Seeing the pattern helps you break it. Third, remind yourself daily, the market is patient, I can be too. Patience isn't passive, it's power.